Time now to speak to one of my favorite CEOs of one of my favorite companies, Comair. Chief Executive Erik Venter is with me at the desk now to unpack the firm's first half numbers. Erik, it's always a pleasure to speak to you.
Thank you.
Good to have you with us. Reading through the SENS announcement, what really struck at me was the first line, actually, that there's an absence of growth in the domestic market. Now, certainly, this obviously brings to highlight the pricing pressures that are ongoing, as well as increased competition in the market.
I think the startling thing is that it's now the 7th year of no real growth in the domestic market. And it's been a combination of factors. Obviously, post-2008, we had this sort of global downturn. Then we had the massive airport charge increases, 172% to fund the World Cup airport infrastructure. And then we've had the oil price rise, which has depressed growth in the market. And on top of that all, we've got this very slow economic growth, which is, at the moment, is really the fundamental issue. So normally you see in most markets, and we've seen in South Africa as well, typically once economic growth is above 2%, you see that revenue in the domestic market for airlines grows at about 2.5 times GDP. And at the moment, at below 2% GDP growth, we're just seeing that there's no growth in the domestic passenger market. So it's a bit concerning. It does mean that as Comair, we can't rely purely on passenger growth to go forward. We have to look at ancillary products, selling more products to the same customer base, diversifying into other services, etc., which we're already quite busy with. But in terms of further growth of the domestic market, I think it's going to be a bit tough going ahead.
How tough are things? We've got increased competition, as mentioned, and the pricing. I think Mango recently slashed its prices, and you've come out very firmly saying we're not in a position to do that because we've hedged our oil price at about $80+ a barrel, and the rand weakness is also something that's impacting on your numbers.
Yeah. Well, I think a good indicator was the fact that in the first half of the year, our operating costs actually grew because of the exchange rate. And our saving on oil was approximately, on dollar oil, was about 100 million rand. Our cost inflation due to the exchange rate alone was 160 million rand. So I think the impact of the exchange rate is hugely underappreciated, how big that effect really is. For the full financial year, we're estimating that based on the forward price of oil, that we might get a total cost saving of 3% due to the oil price. Now, 3% on airfares isn't going to make anyone jump up and down in glee. So I think the whole impact of the oil price, the dollar oil price, has been overestimated in the market, particularly at the consumer level. And the reality is that it's not going to have a monumental effect. Looking forward, at this point in time, if we want to hedge any further, the average price for the year ahead is around $75.
Sure.
So does one buy today at $75 for the rest of the year?
And
I wish someone could tell me.
Exactly. It's difficult to call because you did hedge at $82 a barrel, and we saw
Yes.
the oil price dipping to close to half of that.
And I still think that around $80 is the fundamentally correct price, based on market fundamentals. And I expect that by the end of the calendar year, we're probably going to be back in that range of around $80, I would guess. So, in terms of the longevity of this drop in the oil price, to the kind of levels we're now seeing, I think that was always our concern, is that I don't think this, below $80 is a sustainable level on the oil price. But we'll see. Everyone's got a view on this, and none of them are the same. It'd be nice if it stays down at this level, but I don't think so.
Exactly. Obviously, there's a lot of interest in your diversification strategy. You've got the slow lounges, you've got the catering, and you're also running promotions. I think it's #MadeEasy, where you're selling full-on travel packages from the flight to the accommodation and even the vehicle.
Exactly. And the other one, of course, is our external pilot training as well.
Yes.
We're doing flight simulator training for 36 airlines now. And that's taken off dramatically. We've almost tripled the profit on that alone in the last 6 months. So yes, they're all moving ahead very nicely. And like I said, one simply can't place reliance on pure passenger growth going forward. We really have to look at all these alternatives.
I want us to touch on that training because we picked your brain at the beginning of, or towards the end of last year, when we looked at the matric pass rate figures, and you mentioned that there's a very small pool of talent in the South African market, and sometimes a lack of interest of people wanting to become pilots or work as online or on-air cabin crew. Are you finding it difficult to manage that? Are you finding that other airlines want to pick your talent, perhaps?
Absolutely. Particularly around the previously disadvantaged candidates that we get on board. They are constantly being approached. Fortunately, I think once they've gone through the whole Comair training procedure, they tend to be quite loyal to the company and really sort of inculcated into the culture of the organization, and they're not in a hurry to go move somewhere else. But that's always an issue. Yes, of course, the basic education level, with higher grade maths and science is a requirement to get into pilot training. That's always a tough one. But at the moment, in terms of the bigger picture of the availability of pilots in the market, it's still okay. We're not struggling to find pilots. Comair is still quite a strong employer of choice, and therefore we do have quite a lot of CVs of people wanting to get in. But the real issue, of course, is trying to build up that pool of previously disadvantaged candidates into the pilot profession, because it's quite a status profession, and it's the kind of thing that you do want to have, young matriculants going out there and saying, "Listen, I'm a pilot."
Exactly. You're going to make me change my mind maybe about my profession. But let's pick your brain on, you did have issues with regard to payment and a potential strike on your hands. Has that been bedded down and a long-term agreement put in place?
Look, we're still busy with negotiations on that. I think, unfortunately, strikes have become a bit of a negotiating tool these days with the threat of strikes. But yeah, negotiations carry on. Hopefully we'll get that resolved soon.
On your aircrafts, you have upgraded quite a few and moved into a new fleet of aircraft. Is that where the long-term benefits will be revealed?
Absolutely. I think all of the speculation around hedging and the oil price is all very nice, but the real long-term strategic intent is really to mitigate the cost with much more fuel-efficient aircraft. And the new aircraft that we're currently getting into, there are another 4 of them being delivered end of this year and the beginning of next year. Those already have a 6% fuel saving per flight over the aircraft they're replacing, but they also come with 20% more seats. So effectively you're getting almost 26% per seat fuel saving. And then the next generation coming in 2018 has got another 15% fuel saving over that. So the technology is really moving ahead at quite a pace in terms of improved fuel efficiency. And we're expecting by the time we get to the 2018 deliveries of what's then called the 737-8 MAX, we'll probably be sitting on a saving of around 60% over the aircraft we were flying 7 years ago.
60%?
60% per seat.
What would that do for your profit per passenger? I think in 2013 it sat at 45 Rand.
Probably
last year
nothing.
It was 51. Nothing.
Probably nothing. If you look at the cost of air travel since the 1970s, it's come down by around 65%, but the airfares have come down proportionately. So yes, you get the advantage for a short while, and then competition drives the airfares back down to wipe out that small benefit for a while. So it really is a game of constantly innovating, constantly finding the next cost saving, and hanging on to that as long as you can as a unique saving in the industry, but knowing that within 2 or 3 years it'll be wiped out by airfares. And it's not necessarily the airfares come down to that extent, it's simply that they don't increase at the rate of inflation. So quite often we find airfares just stay completely flat for 10 years at a time. Inflation keeps going up, and you offset the difference with more efficiencies into the business all the time.
Exactly. And diversification.
And diversification, all the bits and pieces.
Just to quickly close off with SAA, I understand that you're part of a team of people who have raised concerns about the bailout once again that they receive from government. I
think again it's the issue of the process as opposed to the quantum. Of course, the quantum makes the process more of an issue. The real issue we've still got is that this isn't a typical guarantee. Guarantee is typically just a case of providing backup assurance in the knowledge that the original debtor should be able to pay off the loan. We're saying that this is going to come out of the fiscus, it is going to come out of taxpayer funds, and therefore it should go through the budget, through the parliamentary process for budget allocation. Exactly. It's not suitable that one minister can simply sign off a guarantee and say, it's never going to be called on to be paid.
Erik, such a pleasure speaking to you as always. Your share price has also been rallying quite strongly, so I'm sure that's something you're happy about too. But many thanks there to Comair CEO Erik Venter.